What's up, guys? Welcome back. Over here, we have the main analyst for Pitmaster. We have here Sebastian. I wanted him to introduce himself and tell you guys a little bit about him, about his trading, and show you guys his journey. So, tell us, take it away.
What's good, everybody?
Bro, that's funny as hell. Leave that in. Let's go. Keep going. What's up?
No.
Tell him a little bit about you, about your trading. How long have you been doing this?
All right, what's going on, guys? So, if you guys do not know me, my name is Sebastian. We've been running Pissmaster already for over 5 years now. We're about to hit, well, technically, we already hit 5 years yesterday, which was May 13. And we built up this community of, starting as some very young traders. We started this many 5 years ago. So, we were like in our late 18 going into 19 years old already. Right now we're already 24 years old. And we build this entire community with this one idea, which is, hey, let's build a community where we can trade every single time. And we're going to be taking losses. We're going to be taking wins with every single trader that, we can connect and bring into this community. So this community is started with the idea. It was a long time ago, like I said, 5 years ago. We were in the FaceTime calls, and I remember we used to do live trading with just random people. I believe it was YouTube live trading. Was it YouTube?
But yeah, bro, that was the best times in the world, bro. That's
It was
insane.
either YouTube or Zoom trading,
I
where we
remember
used,
we had like three viewers at that time.
yeah, we will have like three viewers, and we were just like trade with random people, and it was like an everyday thing. And we decided to build up a community where we can share our analysis and we can share our trade. And obviously, at that time, we were nothing compared to what we are right now. At that time, we were, just trading the randomest thing ever. We were trading something that did not make any sense, which was, trading as beginners. Something like this, and we'll buy the market. And of course, you guys already know that most of the time when price does something like this, it is most time a fake out. So we were trading like, like just beginner traders, trying to understand what's going on here. We were just, we were not into school. We were not into none of that entire process of growing up. We just focused on building something that we liked. And most of the thing that we liked here was just trading. So Matt and I, we
Right.
just end up building this entire community.
So I want to ask you a question. So in that time, we obviously we started trading and we did not know what we were doing. But what was the like that key thing that you feel that clicked for you in your trading throughout that time that made you go from like a random like inconsistent trader to a consistent trader?
So what was the, say that again?
So what was that one thing that clicked for you in in trading that was like that made you from an inconsistent trader to a consistent trader? Because again, you said it like before we were trading those little stupid patterns, and
Yeah.
we didn't know what we were doing, and now this is our full-time job. This is what we do. What was that little thing that you switched in your mindset, maybe in your trading, maybe? What was that one thing you would say, or is it multiple things?
So I think there's obviously multiple of them because we as a trader is trading what I see what trading is because it really does play a huge part of your outside life than just your work life because trading, it obviously is something that builds your discipline and builds your consistency, right? And in trading, there is a lot of emotion, right? So you can lose a trade and you can feel emotion throughout the day and be sad and then, make yourself overthink a lot of stuff. And so it does plays a huge part when it goes into your personal life. And there's obviously going to be multiple problems here in this game because at the end of the day, this is more of like a, what is that one word that is,
Probabilities?
no, that is more of building yourself. But there's a word to that. Is
Uh,
a personal development.
person of
So
the
I use trading does play a huge part as a personal development because you get into this mindset that you want to become good, right?
yeah.
So and become good, you have to be good in both things. You cannot just be good in one thing. So if you want to be really good in trading, right? Trading obviously has these three things, which is consistency, discipline, and being patient. And in life, you're gonna end up needing those three things to be able to actually succeed what you want to do. So I say one of the big things that really, really changed for me was that the market, right? Literally the market is knows your emotions. The market knows exactly when you're desperate. The market knows exactly when you're in this emotional urgency that you want to make this amount of money so bad. So the market already knows you.
Yeah.
You don't know the market, but the market already knows you. So that can be one of the most things here because obviously the more that you feel that you need to trade, like people have this, philosophy or idea that if you trade more or you're more on the screen, you're going to be making more money. But like I
Yeah.
was saying, the market already understands you. The market knows exactly what you want. So The market is always going to punish you for your emotional urgency. All you got to do is just follow those three things, which is being disciplined, being patient, and being as well, consistency. You got to be in the market every single day, and it's you against yourself and against the market. So it's not the market against you. It's just three things: you versus you, and then the market. So emotional urgency does plays a huge part because, like I told you, it's gonna understand what is your needs. So let's say if I give you an example, if we were trade before how we used to, this is exactly a good example right here. You have these two levels here. Just because price broke over here, you're gonna have the emotion that okay, we respected this. So you're emotional and you already want to enter the market, but you're
Yeah.
not letting the market give exactly what you need. Because if you really take a look here from higher zones, you can see it's just up and down. So
Mm.
if you're forcing trades, right, emotional urgency is just gonna give you guys those three things. So it's gonna give you, for example, you have rush entries, which can be one of the things. You also
Okay.
have you're going to be forcing your setups, and then you're also going to be over risking.
Yeah.
So this all comes from emotional trading. You want to rush your entry because you have emotion feelings that you're fear of missing out the market. And this comes from not understanding because at the end of the day, there's a difference between a strategy and then there's a difference between a system. A system, it's basically going to be something that you're going to repeat every single day. So a good way to say that can be more of like, um,
A
what
checklist,
can
something you
be
do every single day. One, two, three, four,
exactly.
five steps.
So it's like, for example, when you wake up, the first step that you do is that you go brush your teeth. So that's already a system that you already programmed in your life.
100%.
You brush your teeth, and then the second thing you do is that you probably open the window, and then you go to your computer, and that's a process that you don't see yourself because you're unconsciously doing it. But that's a system that you already built that it became a discipline and became a consistency in that. So the same thing has to be with trading. So like I was telling you, trading does reflect a lot from your outside life. So think about it this way: the market, you can think about everything in this world, and you can just look at it in that point of view of the market, right? Obviously not with the charts, but more of like the way of approaching the markets. So let's say when you know something is wrong and you're not supposed to do it, then that's already a feeling that you shouldn't do it. So it's the same thing in the
Yeah.
market. If you see something here that you know is not making sense, but you have the emotion feeling that you want to rush the entry, then you already know exactly what your results are going to be.
100%. 100%. I totally agree with you. I totally agree with you. So, okay, so you talked a little bit about psychology and other stuff, but I want to see you, I want to see if you can break down the market a little bit, like talk about more about technicals and your system in trading that you have right now. It doesn't have to be the whole thing. You can just kind of like give us an overview of you talked about psychology, but I want to see like what are your three steps or your four steps that you see in the market every single day to actually take a setup as well.
Okay, so in the market, I'm gonna a quick rundown to give you guys an idea how exactly do I trade. So yeah, I gotta follow this checklist every single time. So the first thing that you always want to be checking, that me personally do, is I'm always checking exactly what happened on the daily time frame, right? So if you focus here on the daily, this is just a quick process, right? If we focus here on the daily time frame, we can see that there's a lot of wick rejection from multiple sides. You have one from here, and you also have one from here. So most likely on the weekly time frame, it's going to be a wick that is like in the middle, just like this,
Yeah.
right? So that already off the bat from the weekly and from the daily time frame, that already shows you that the market is very indecisive. There's not really, anything, just the market bouncing from highs to lows. Same thing on the 4 hour time frame from highs to lows. So when we see a market condition like this, that means that you cannot force setups, you cannot rush in entry, and you cannot also over risk. So already here today, I have not taken any trade because there's nothing going on in the market. The market is just repeating the same pattern that it did here
Yeah.
from all last night. So today's Thursday. We're trading the New York session, but I have not taken any entry. And I could have taken if I was letting my emotion because I wanted to make the move quickly or I wanted to just send a signal. But there's nothing. That's how in before me, party would have taken a trade because I just wanted to get over the day.
Yeah.
I have the idea of like, hey, if I do more, if I'm in the market, you're gonna make more money or you're gonna be more successful. And it
Yeah.
doesn't add up like that. That mindset in there is just like the more that you feel like you need to win, the harder you're gonna lose.
Yeah, you're thinking about just the money and not obviously like protecting your capital and managing your risk.
Exactly. So that's like already a system, or a, you can say a system, or a self-aware consistency that you already have in your mind. That you're not letting your body's no longer forcing anything. Your body's already being calm towards those moments.
Yeah,
So if I look here, if we take a look here in the daily, the first thing that I'm going to be looking at is going to be the highs of the week, which is most likely this one's, right?
yeah.
So we're going to click it from here. And obviously, we're seeing that price is rejecting from here, from these previous highs. And then
Mm-hmm.
if we see the current lows of the days, right, then most likely price is just reacting off this entire imbalance from the daily time frame, right? Now,
Yeah,
notice how there's multiple wick rejection from the downside. So that's most likely going to be an intraday play. So on the 4 hour time frame, we can see that we had a nice push towards the upside. We have broken above these key levels here, which are all these highs, but then price is also reacting off multiple imbalances from the left side. So we have this one here. We also have this one from here.
yeah.
So, and if you look towards this side, we are reacting from this entire bearish imbalance that starts from this candle.
I see. Wow. Okay.
So you see, those are like already my huge zones from higher time frame structure.
Okay.
So that's exactly how I look for my limit order, because I look from both sides of the market, what the market is doing from the upside and what the market is doing from the downside. Now, going again to the daily time frame, if we take a look even a little bit more deeper perspective, you can see from this side here, we are
Yeah.
having technically a reaction from this one.
Okay.
You see, and then if you look at it from the weekly time frame, the weekly is having a reaction from this
Fr-
one all the
Oh
way
yeah,
to this one.
the whole move. Yeah.
Exactly. So it shows us that the market is still very indecisive. Now, when the market is indecisive, this is obviously for a long-term play, but it
Yeah.
also plays out. It also can play out throughout the day because the market obviously moves in different ways. It can move 100,000 pips in one day, but then it can go back inside the range. And that's exactly what the market has been doing for the past couple weeks. So we can start off in March. We had a nice push. We recover from all of this, but then market started declining back again,
Yeah.
right? And then in this case here, price is having a reaction from here. So most likely, if you go into the 4 hour time frame, we are respecting anything, any zones around here, which in this case, we have this clear demand zone from right here.
Hearn. Oh, so that's how you write your levels out, your points of interest.
Exactly. That's how exactly I point out my interest when it comes into, understanding higher time for perspective. But
And then
obviously, uh-huh.
and then diving deeper into the entries. Okay, this is how you draw your supports and your resistance, your levels of interest. Diving deeper into entry, what is your system there?
So on the entries is one of my favorite things because I master exactly how to enter the market quickly compared to how I used to. Used to, like I was explaining to you guys, used to be force setups and a rush entry. Basically, I
Okay.
would trade out breakouts before,
Okay.
or just price coming into a zone, reacting once, and then taking the buys when we have a push here. So old me probably would have taken a trade right here. My stop loss would have been here, but look at the risk to reward there. And then the market just repeats itself because it probably reacted from this zone here. So I'm guessing that, oh, because it did from here or it did from here, it's going to do it the third time.
Yeah.
So on the entry, you have to be very, very careful because entry is obviously where you're going to enter the market and where you need to also understand where you're going to exit the market, right? Now, the entry, one thing that I've learned is that you never want to be in first place. You always want to come second place.
That's a really good that's a really good
You don't want to come first or second.
wow, that's a really
Because
good one. I love
the
that.
first one, you're the first one, you can either multiple things because the market is always going to give you guys fake move before giving you guys the real move.
Mm-hmm.
So what I mean by don't come first, come second place is that let's say that you have these levels here and you see that market is repeating the pattern like this, like this, like this, and then you think the market is ready to go.
Yeah.
All right. And let's say coincidence, right? We have these highs here. And then yes, we respect something down over here. But the market, most likely what is it going to do here? What do you think it's going to do at this point here?
I would say cells.
And like it will manipulate basically the highs. Take out those
Yeah.
highs here. Because above highs, there's always going to be buy stops order and there's also going to be early sellers.
Yeah.
So the entry, how I master it, first thing first, it has to align with the trend. And when I talk about the trend, it has to be anything from the intraday time frame. And
Intraday.
when I
Okay.
talk about intraday, obviously it's the hourly, the 30-minute, all the way to a lower time frame.
Yeah.
So it has to match the intraday trend. So if we do see a push like this, you don't want to become first place, because first place, if you take your first entry going based on how this happens, majority of the time, it can just stop you
Yeah.
guys out, because the market still hasn't given you anything. You're going based on what's moving. You're going based on momentum. You're not going based on exactly where did the move exactly happen from. So I have to match with the intraday trend. The second thing that I also need to look for is understand the impulsive, which is going to be, we can say the imbalances, right? So impulsive move,
Impulsive moves. Okay.
that's imbalance. The impulsive and the imbalance is exactly where I enter the market all the time. And that's exactly how I set my limits. So if we take a look here in the actual market, if I can give you guys a good example, we can talk about a trade that I took yesterday. Yesterday
The
we took
one
the trade.
the
Say
one in
what?
Asia session.
No, yeah, the one enjoying the New York session that we took the
Oh,
sell, we took the buys.
that was a beautiful trade.
So my entry was at 47.09. So I can do that one very quick and explain that one. This right here was my entry point, which was this was Tuesday, and this was the entire day of Wednesday, which I believe it was this one right here. Yeah, 47.09. So this was our entry point from yesterday. And I called this out yesterday inside the signal room. Let's move this cat here.
Hey,
Raton.
Mini. Hey, Mini.
All right. So this was the entry,
Yeah.
47.09. All
Beautiful.
right. And this is going based on what happened here. So this is exactly how I caught it. So let's test you. From looking at this here, you got to look from the left side. So what exactly has price done from this entire move?
Yeah, it's respected that just lower lows, lower highs, and it's been respecting that level.
Exactly. So in this case, how I caught that entry was going based on what happened on the market open. So we have this size here where price pretty much, respected and then caused the market to drop.
Yeah.
So that's one move. We're not going to catch every single move of the market. So this was, let's say that we missed this trade. But then the market, we come back down these lows and then price started recovering from that entire move. Now here, this exact high here was the main idea why I took sales from here. So this was a high already that was giving me a probability. So if we take a look at this high, let's say we go from the intraday time frame on the hourly, we can see that price, we're coming back towards a specific zone. So most likely I caught this on the 15. We're coming from this exact zone right over here,
Okay.
which is exactly the area of supply where sellers stepped into the market. So this happened late Asian session going into the London session. Okay. So this
Yeah.
happened Asian session going into the late London session, recovering. And obviously up here, we have a lot of these gaps, a lot of these value gaps that price never came back to recovery, which can probably be entry signals if price continues pushing higher from there. But let's talk about this one. So this is a gap that happened, and this is exactly where majority of the volume step into the market. And the way
Okay.
that you can confirm that is obviously because look at the pattern here. If we take a look here from this drop, market was ranging. We had a drop, market was ranging, and then we had a huge push. We retest, and boom, the volume stepped in.
Yeah.
So that's obviously a clear sign that this exact time is where volume stepped in. The market recovered because we came back towards these lows over here, which price action, end up recovering from it, right? So
Yeah.
we pushed back towards the upside. We broke above these highs here, but this is all simply grabbing liquidity. This is basically a liquidity pool up here
A sweep.
because we
Yeah.
have we have all of these highs here. So most likely, if you guys go on the hourly time frame, 4 hour time frame, it's just all a fake break. We have rejection from here, and then price continues pushing lower. So that when I say come second place, because a lot of traders could have easily gotten stopped out of this trade simply because what happened here, it broke above these highs,
Yeah, and they
right?
would start targeting buys, right? Thinking it
Exactly.
was
So
buys.
so only because we broke above these highs, this right here probably would have been your entry, your stop loss right here. And
Mm-hmm.
then like look at the risk to reward. Like you're not catching anything at this point here. You're just basically trading, breakouts. That I already said that breakouts are very low probability because there's always liquidity above highs and above lows or below lows. So once we had this entire push towards the downside, remember what I said, we focus on the imbalance. So imbalance here, we have one right over here. that targets
Mm,
from the 7013.
I see it. See it.
You see from this one here?
Yeah.
This one exactly from here. So this imbalance we broke underneath. This happened during the Asian session, London session going into yesterday. So this was
Okay.
all Tuesday move. This is all Tuesday Asian session. This is now Wednesday London session. London, we came back to pretty much retest the move that happened on Tuesday Asian session. So on Tuesday,
Yeah.
after having this push, notice how the market started consolidating. There was no clear move, and boom, volume stepped in. This right here was a candle that pretty much, told us that this is exactly where sellers push back. So think about the imbalances. Imbalances are going to be zones where the market always going to return back. It gives a reason why market has to come back towards these zones. So you guys can also say that imbalance can be mostly used as magnets, right?
Yeah.
So magnets, prices come back. This is the first time, right? But remember how I said you never want to come first place because the probability of price, failing on this one, why would it fail on this one? Like the probability is lower on this one compared to the other one. It's simply because if you guys take a look here on the left side, we also have a bullish impulse towards the upside where price respected this one right here.
Yeah.
So again, the probability of this playing out, what is it? It's a
It's
50-50.
lower. It's lower. Yeah.
Exactly. It's a lower probability because again, you have to take a look. So this is what I do. I like to deep dive a lot into the market. So I like to, this is like more overthinking the market, but to be safe.
Okay.
It's like more overthinking the market, but to be safe. And it's like, it's not really necessary, but that's the way that I've traded. And that's exactly how I learned to catch, and exactly limits entry and stuff.
That's the secret sauce.
The little secret sauce in which you have to overthink and you overthink a lot in life. So if you take a look here, you have an impulsive. So
Yeah.
usually time that price creates an impulse, we always come back and create a higher low, right? But
Yeah.
this is where a lot of people mess up. A lot of traders mess this up. They're taking trade based on what's happening on the 15 and based on what's happening on the 30 minute, but really ignoring what's going on higher time frame perspective. So the 4 hour and the hourly time frame is going to give you guys the actual direction than what the 30 and the 15-minute time frame is going to give you. Again, you can catch trades based on lower time frame perspective, but that depends on what type of trader you are in a sense, because I focus more on intraday plays and focusing on scalp moves. So in here, what I need to wait for is for a simple price to break underneath the structure, which in this case is going to be this entire lows. So my confirmation and confluence from here is that, okay, we respected this zones here. We're going based on the 4 hour. 4 hour has respected these entire highs over here. On top
Yeah.
of that, we are respecting these zones here. So the probability of sell playing out more than buys are higher because again, daily time frame, we're still in the we're technically in the bearish market.
Yeah.
We have the last highs, which was lower highs, and we have this new lows, and then we also have this new lower highs.
Yeah. We're putting those lower highs.
So now we're printing those lower highs. So now, once we have this entire pushback over here, and we finally break underneath structure, boom, that's exactly how I catches my entry because I already confirmed those are my three confluence, my three confirmation. Now, a lot of people can be like, hey, why don't you catch the entry from here? Or
Mm.
why don't I catch the entry from this breakout? Right? Like
Why? Why?
you can see, let me show you right now. You can see, and it's more of like the overthinking side. But you see this right here?
Mm-hmm.
Okay. So if we take a look here on the 15, and you have even asked me like, why do you target the highs? Like why you have entry super high? Like how do you know price is gonna come back towards these levels?
Mm-hmm.
And it's very simple to understand it, which is just focusing on the main zone where I really focus on is exactly where the volume stepped in. I'm not focusing on what's happening here because this is already traded data. This is something that has already been traded,
Mm-hmm.
right? And then I focus on zones where price always has to come back. So that is my secret there, which is go into the zone where the move happened. So if market did this, let's say market was doing this, we break out, and then we have more structure here. I focus on where the move happened.
Yeah. That. Okay. I get you.
I
So
focus on
price has to retrace to that level because there's more orders waiting for them.
exactly. So this is exactly where, let's say, a good way to explain it. Let's say that 80% of buyers stepped into the market here,
Mm-hmm.
and there's still more pending orders down here. So now this is the institution plays, which is where big players stepped in, which is all the money in the market. And then this is where little players are playing. So you need to have the mindset of like, and it's obviously a game of probability, but you need to also have the mindset that you want to be trading exactly how these people are trading, even though you don't physically or have the exact amount of, money that these traders are trading here. But you need to understand exactly where it makes sense. Because
Yeah.
here, this is where the institution, think about it like this way. This is where the institution gives a move. And then the retail trader, let's say this is for what can be a good example? Let's say this is the lion. A lion step in, attack the prey,
Yeah.
right? And now the cubs, the little lions, they're gonna come here and they're gonna start eating the leftovers,
Mm-hmm.
right? They're gonna start eating the leftovers. And then the other lions come back and then they attack and then they run away.
Heard. Okay.
So when they run away, they come back because they're hungry again. So when they're hungry, they're taking out money. They're taking out all of the stop loss. So the big traders are hungry again. They got to take out the money. So they let the little traders take their positions from here. And that's exactly why you can confirm it from here. You have the move here, and then notice how the market is just consolidating from here.
Yeah.
And then you have the fake move where the more hungry people, remember what I told you guys, the more when you're trading based on emotion, because you're seeing what the market is doing here, you're probably thinking that you're missing out the trade. Because
Yeah.
we created this high, we created these lows, we created this lower high, we broke under here. So what are the chances that price comes here and they continue selling? There's always going to be a low probability in this point, but you're trading already where the market has already given the move. So what
Yeah.
I focus on,
You want to come in second, wait for the
exactly.
second.
You want to come in second, and you also have to match the session that you're trading. So for example, this here happened London session, this all happened New York session, and then around 11, 12 o'clock the market slowly starts to die. Now focus over here. This is the main reason, because yes, we have respected. Notice, you see this one here, remember how I told you always got to be careful on the left side?
Yeah.
Notice how it respected. So once it respected it, this gap over here, it's already invalid. And the reason why it's invalid, because look at this, it already played out.
Oh, okay. I get
So
you. I get you.
it already played out here.
Yeah.
So it already played out, but now you respected these lows. And this low is already showing us that the sellers are dying off. So now buyers, the market needs to give time again. This is where the prey, like the cubs, they come into the market. They start taking their little profits, but then the market comes back towards the zone. And this is exactly where I wanted to target my entry, which is starting from this exact to here, which is my supply zone.
Mm, beautiful.
So this is exactly where I will set up my limit, right? And I believe you can also play this on fibs level. If you play from fibs here, I believe I did. It's gonna be towards golden zone. Yeah, you see it
Yeah, the 0.6, 0.6.
exactly. So from this
Yep.
high here that happened from 20 to 930.
Beautiful.
From the swing high to the swing lows, and then it targets exactly like the golden zone comes back exactly where the volume stepped in. So
I
it's a
see.
lot. It's a lot of overthinking, but once you master it, there's no overthinking because you're already aware of it. So you don't have to do exactly the process that I just did.
Yeah, it
It's
becomes a
just
habit. It's just a habit for you to look at those exact things every single day, and those are the things that push you to that
exactly.
consistency in your trading.
It becomes a habit that you see every single day in the market. Like the market is going to repeat it every single time. So you already know that, okay, if it did this and we're seeing this, there's the most chance that something is happening in this side. So looking over towards the left side gives you the idea. So the way that I enter the market, it's like this. You always want to come second place. So notice if I would have entered the trade here, look how the move would have been. My stop loss are always like always above, invalidation zones. So
Yeah,
there's no clear invalidation zone here. My invalidation zone here will be this high. So look at that. Look at that risk to reward
risk
there.
reward. Yeah, it's horrible. Correct.
It's a very bad risk to reward. So again, there's gonna be time that you might miss a trade, which is completely fine because the market is not going nowhere. The market is gonna repeat it over and over again. So that's just another thing that you need to have in mind. To not rush the market, the market is gonna repeat it. If you miss it one time, cool. You're gonna come back the next day and the market is gonna repeat it. And that comes from the system, not the strategy. The strategy is already what is how you read the market, but the system is how you repeat the market.
Heard.
So it's like you can also think about it. Let's say Running, you can be slow at a specific zone. Let's say zone one, you're very slow, but if you master that zone and you're already aware that that zone is your slowest one, and you keep mastering it, then you're gonna be faster the next time. But you have to be aware of it. If you're not
Yeah.
aware of it, then you're just repeating the same failure over and over again, and then you're gonna continue questioning yourself. Why is this? Why is that? And when you question yourself, you're basically already giving yourself the answer.
Yeah. That's why I
So
always say it's good to it's very important to journal because that's how you become self-aware of those mistakes that you keep repeating over and over and over again, and then
exactly,
getting out of that hamster wheel of repetition.
and that repetition. Now, for example, look at this. If we take a look, exactly prices having the same reaction where we took the sell yesterday. But for
Yeah.
me, there's no confirmation. There's no sell. I'm not going to repeat the same sell that happened here because if we take a look here, the probability if I would have set the limit, it would have been I could have gotten stopped out. Right
Okay.
now, this is repeating the same move that happened yesterday. So a lot of traders can be like, "Hey, why don't you take the same trade that you took yesterday if it's respected?" Look at it. It's not giving me. There's no confirmation for me here.
Heard.
Like it's just ranging. And then if we take a look here, we have these lows where price yesterday we had in a move. Like in the London session, we were able to benefit off this move from the London session. This entire move here, we were able to catch 200 pips. And this is going based on what happened here, which is okay, price is respecting this level here.
Mm.
And well, remember what I look for? I look for impulsive move. And this is exactly the impulsive move.
Of course, I
On
see it
top of
now.
that, and then on top of that, we broke above this entire structure here. All right.
Yeah, I see it.
And if you guys kind of want to scalp this on the five, you guys can see this as well. You have the fake. This is basically a sell side liquidity. We tap into the same exact zone. Price has the impulsive move. Buyer stepped into the market. My entry on this trade here was at 49.96. And you
Yeah.
guys can literally just place the fibs from this high to these lows here and look how it taps into those entire golden zones zone zero point
Beautiful.
0.5. So my entry from yesterday was, again, it's just repeating the system. It taps a major demand. You have the impulsive. You go based on the trend. The trend in here is clearly bullish in a sense because we're
Yeah.
respecting all of these lows. So these are higher lows compared to these lows here. These are last lows.
Yeah.
So you have highs, higher lows, we respect it. Higher lows keeps respecting. All you guys got to do is just wait for impulsive. So that's exactly how I trade. So my set of the limit at 49.96 or 93 was my entry actually, 93. So I had the entry here. We were in a small drawdown, but my stop loss was placed underneath the invalidation zone, which is going to be underneath these zones. So it was a one-on-one play, but we end up catching, that exact move that we wanted. Obviously, again, probability. If price would have broken above these highs, then yes, it would have played out even better. So that comes
No, totally. Keep going.
so that comes to explain why haven't I taken a trade today? Because again, market is just repeating the same pattern from here and the same pattern from here. So now I'm not gonna force a trade. I already got the moves that I wanted, but now the market is not really giving me anything. So if we take a look here on the intraday, I was waiting for price to break above here because we respect it. So if price would have probably broken above these highs here and respected these zones here, then yes, I would have
Mm.
probably taken a trade. But look how it respected this gap here.
Yeah. I
And
was
it's
looking for
going
the same thing. I was looking for the same that inverse
exactly.
for potential buys.
So what I wanted to see was for price to break. Since we respected this, I was waiting for an impulsive. Once we have the impulsive, then I can target as a limit. But
No,
there's nothing
beautiful.
going on. So now the market is just there. So now what we do is just sit down. And this is a habit that you build. Obviously, it's more of a skill. Having the skill to be patient is everything that you need when it comes into basically living. Patience is always going to save you guys time and money.
So that's what I wanted to get to. So we talked a little bit about you, a little bit about your psychology, a little bit you broke down your whole strategy, your whole system in trading. The last question, I know you're busy, and I don't I want to let you go. The last question I have is if in Pitmaster we have a lot of people from advanced traders to beginner traders. Somebody that is struggling in their journey in trading, somebody that has not found a consistency in their trading. What is the one thing that you would tell them? The number one advice that you would give them to focus on in the next, let's say, 3 to 6 months to completely change their their journey in trading? What is the number one thing they should be focusing on and stop like leave behind?
Okay, so when I think the one thing that I would say, because you can also put this in perspective in different things than just trading, is basically you gotta take a step back. Basically, once you're doing something, repeating, and you're not getting the results that you want, then that means that there's a problem. There's a problem inside that exact zone that you're trying to get in, right?
Yeah,
And whenever you have a problem, whenever you're stuck in that exact zone, you're gonna repeat the pattern over and over again. So if I give you an example, how it can look in like in a pattern, let's say that you started from here, you have an idea, right? But then you
yeah.
repeat the idea. This is exactly what is gonna happen because you're repeating the same thing over and over again. So maybe in here, you got the results you wanted, and you came over here, you have the same results from here. You come from here, you have the same results from here, from here. But this one had the idea of going up and not going down, right?
Hmm.
So in here, you probably have a problem that you're doing, and it can be a very simple problem. So let's say, for example, if we can give a life problem, let's say that your life problem is you're trying to save 5,000 or $10,000 extra a month, but you're spending 5,000 every single month. But then you keep questioning yourself, like, okay, I make this certain amount of money, but I can't get to 5,000. I don't know why, because you're spending. So that's already a problem you're aware of what you're doing and why the reason why you're not getting there. So when it comes into trading, let's say, for example, your problem here is rushing an entry. So you're going based on what the market is doing and you're trying to rush an entry. So you
Yeah.
you repeat that same pattern over and over again. So I would say like the best thing to do here is you're gonna have to take a step back, basically a step back of everything that you're doing. Literally
Mm.
become a student because at the end of the day, you're always gonna be a student. You're gonna be learning always, or you're always gonna be learning every single day.
I love that. That's
So
good.
you want to go back all the way down to exactly day one. And it's not gonna is and when you restart, it doesn't mean that it's gonna take you longer. Because when you restart, maybe you're killing because you can have the idea of like, okay, I'm doing this every single day, but you're not getting the results that you want. So there's a problem there. But once you restart and you're aware of what was the problem, you will literally break through that quickly.
You're going all the way to the root and getting away from it so it can flourish even better and bigger.
Exactly. So you're gonna break that exact habit that you're having, which can be a bad rule, to create a new rule that can literally expand quickly. And I get the idea of that a lot of people they just fear. Like one of the biggest fear, I guess, when it comes into this entrepreneur world or it comes into the mindset of having the idea of who you want to become. Because again, entrepreneur or like you be doing everything yourself comes from self-development
Yeah.
and you get into this mindset that you think that you're doing a lot, but you don't want to break out of that routine because it's maybe gonna make you feel like shit, or maybe you're gonna feel like something is going wrong. Like you're not gonna
Hmm.
get exactly what you want, but you also gotta understand that your brain it outperforms, like it's pretty much burning itself. And you're like killing yourself mentally, you're killing yourself, you're draining yourself because you want to get there already, but you doing the same routine. So if you're repeating the same routine for weeks, and you're still not there, then there's a problem.
There's a problem, of course. Yeah.
There's a complete problem in there. So it's like don't keep repeating the same thing, even if it feels like you're closer, but you're still not getting there. There's a problem that you have to break out. So, like I
100%.
said, you always got to step back and pretty much restart. So, like we all like this one phrase that every single self development people has that it's a funny saying, but it's something that is true. Is that I'm gonna restart again on Monday. Monday I start all over again, or Tuesday I start all over again. Like you want to restart all over again because you
Yeah.
feel like it can be one little thing. Let's say that you ate like you've been on a streak with good food, but then you ate one bad food, and then you feel like shit, but you want to restart again on Monday.
Yeah.
So and then let's say that pattern is going to repeat itself because I personally go through that, which I start on Monday, I do good for 3, 4, 5 days, I fuck up, and then I want to start again all over Monday.
Yeah. No, me too. I feel like everybody is relates to that.
Yeah, so you mess up and you want to go back again to Monday because now you're motivated. But
Yeah.
remember, motivation it just comes from one little thing. So you can probably be motivated with the market, you can lose your funded, you can lose your account, but then you come back again on Monday, but you're still repeating the same thing.
Yeah.
So what you have to do here is just be self-aware of the mistake that you're repeating over and over again. And it can be a very small mistake. Maybe the mistake here is that you're trading way too early. Like you want to catch the move.
Yeah.
So that can be a problem there. The problem is that you want to be involved with the market already, but you're not letting the market do. And remember, trading is not what you guys see. It's not what you guys think that it's like buy, sell, move money coming everywhere. Trading is the most boring things ever because all you got to do is just wait.
We were talking about this the other day. It's like
Yes.
this thing that we do is the most boring thing in the world, but it is the fruits to the labor is immensely. But
Yeah,
it
because
is
it's
very, very boring work. It's just 90% of the time you're just sitting on your hands and you're just waiting for that setup to present itself.
you're like it's the most boring thing in the world because it's like it's literally 2 hours or not even 2 hours. You can mark up like for example, I can do the entire analysis from here and I did it for 30 minutes, but yet the market has not done anything.
Of course, of course. It's been
So
it's been chopping around all day.
yes, look, it's been shopping all day and I've been sitting here since 9 in the morning and the market has not done anything. It's 12 o'clock. So like I say, it's the boring thing in the world. But that's what you need to understand. When it's boring and when it's very slow, it does not mean that you're not gonna get closer to your success. It's
Yeah.
gonna mean the opposite, that you're getting closer to your success. Because now you understand the art of being patient and you already understand the art of following the system that is gonna get you profitable. So if your big mistake here was being impatient or you want to be involved with the market and you see the market is doing something there, there's no point for you to force something. Like don't try to create something when there's nothing.
Mm.
So you
I,
don't want to
I
force
I hope every single one of you is writing all this stuff down because this is very, very important stuff.
you don't want to force something when there's nothing. And once you start forcing, you're gonna get the results from your emotions. So never listen to your emotions when it comes into anything. And especially when if you're really focused on trading, pull your emotion towards the side. Because your emotions is literally gonna ruin you guys from left to right. And obviously, we're human. We're gonna feel emotions here and there.
Yeah.
But if you really, really, really want to do this, you need to put your emotions out of the side, and
No,
then
I totally agree.
put your emotion towards the side and just let it be boring. Like once it's boring, you're doing it good. If it's not boring and it's causing you pressure, you're doing it wrong. So you can literally have a funded account. Let's say that you want to pass an account and you've been trying to pass this account. Don't go based on what you guys see that people has passed it left and right. You want to pass it the right way, and you got to stay in your own lane. Your own lane is like you're building your own story. You're not building your story based on what you see from this guy or based on what you see from us. You're
Yeah.
building your story based on there. Because again, we've been in this entire journey and we're already in the point that we are, but yeah, obviously we want more. But once we
Yeah.
want more, that's when you lose more because that's when you let emotion get into you. And when you have
Mm.
emotion to get into you, you're gonna start building up greedy. You're gonna start building up fear. You're gonna start building up so many emotions, and you're mixed up in the place and not enjoying what you actually work for.
The process.
Exactly, you're not enjoying the process, so you have to let it be boring. So let's say that you always gotta take a step back. So like to answer that is just take a step back, be aware of what you're doing, come back the next time and plan it out correctly. So it can be three things. You don't have to look for a million things. It can be three things. Maybe it can be like, hey, I'm trading New York, 8 a.m. I'm trading impulsive. I'm trading what else can be? I'm closing the market let's say at 12 o'clock. Boom. Those three rules.
Yeah.
All you need is these three things.
And have the consistency to follow them every single day.
And have the consistency exactly to follow it every single day. One day it can be good. One day it can be no, one day it can be bad, and then the next day it can be good. The next day can be good. The next day can be bad. It can be bad and it can be good. It can be good, 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 and then it can be bad. It's gonna be some process that is gonna repeat itself over and over again.
Really good. I like that too.
It's gonna be a
100% I
process
do
that's gonna
agree.
repeat over and over again. And as well, you gotta have the mindset. Because again,
No,
you're
I and
playing.
we're gonna what I want to do is I want to leave the mindset to the next episode. I would love to cut it up and we leave the next information for episode 2.
Yeah, the mindset will play a big, big part because the mindset, it's exactly where it comes into self-sabotage. It comes to overthinking. So we can talk about the mindset later on.
So exactly. That is a great point for every single one of you guys to subscribe. We'll be coming up with the episode two. We'll be talking about mindset. We'll be talking more about psychology. We'll be diving deeper into all these concepts and systems to help you get better in your trading journey. Sas, I think that is all the time that we have right now. Thank you guys for joining and being here with us. And do you have any other words before we close it up? Before we wrap it up?
Um, one of the words that I can say here is just stay in your own lane. That's gonna help you guys a lot. Don't compare yourself too much. Stay in your own lane.
No, a
That's
hundred
it.
percent. I totally agree. So I hope you guys learned a lot. I hope you guys wrote a lot of notes. This is a lot of valuable information. I learned a lot as well too, and we've been doing this for a very very long time. So we'll see you guys on episode two that will be dropping off shortly. Again, subscribe, put the notification bells on so you guys get the bell when the episode launches, and we'll see you guys soon.
Peace.